Jerome Golden joins us, the president of Golden Retirement Advisors, to talk a little bit about what our future holds with our 401ks. Jerome, welcome to the program.
No, thanks for having me, Ernie.
Are people more confident now about how to invest for their own future?
Yeah, I think Fidelity put out a survey that showed that since 2008, people are feeling a little more optimistic about their retirement plans, although they're also cautious because they don't want to see a repeat of what happened in 2008.
It does seem, though, that optimism comes and goes with the market. If we were in a bear market right now, I'm not sure how optimistic they would actually be.
Yeah, I mean, they've seen their savings come back to the 2008 levels, but they also had that shock. There was the average individual saw their financial assets decline by 34%, so that was quite a shock.
What do we do to plan for the future so we don't find ourselves on the day we're going to retire, that's the day that the market crashes again?
Well, we don't control the market, so our view is you've got to deal with the things you control. So the first thing is diversification. You control the ability to diversify between stocks and bonds, mutual funds, and types of funds. So diversification is one. Second is lower your fees. Those fees, the saving in fees, goes right to your bottom line. So see if you can lower your fees. And finally, another thing you control is taxes, and that is try to defer taxes on your retirement savings for as long as possible.
Well, that's a question I've been pondering for quite a while now. The Roth IRA or a Roth 401k versus a regular one, which would be tax deductible, tax deferred now rather, versus taking it, not taking any tax deduction now, doing a Roth. Which one would be better for the future? Which one long term plays out better for your bottom line?
Most people would argue that if you believe you're going to be in a lower tax bracket, in retirement, then the rollover, the regular IRA is fine. But if you're going to be in the same or higher tax bracket, then the Roth IRA, which provides you with tax-free income, seems to be favorable. The other opportunity is to convert from a rollover to a Roth, and that seems to work best if you're in a particularly low tax bracket because of lost earnings or capital losses. So you ought to think about converting from a rollover to Roth if you're in that low tax bracket before retirement.
What do you think the biggest mistake we make is when we're planning for our retirement?
Well, our view is, people focus on the number, $1 million, $500,000. They focus on savings. It's our view that the better focus is on retirement income. That is, how much of your pre-retirement income can you replace? And you'll get very different conclusions when you think about your plan in terms of an income plan rather than a pure savings plan.
What do you do to, because I look at the plans and the things that are out there, and I wonder how much is this going to yield for me for income? How do you know what your income is going to be?
Well, obviously, it's a lot of variables. It depends on the rate of growth of your savings and particularly the interest rate that you're going to achieve, at retirement, because their income is going to be driven by the level of interest rates. So our approach is to do the best job we can based on current conditions and just continually update that plan. And as you approach that critical time, the numbers will get firmer. But in all cases, you're going to be looking at that income number rather than that magic savings number.
Now, I know you said it's a mistake to look at the big savings number, but is there a number that you should have in mind or shoot for?
Well, we work backwards. If you have, let's pick a number, $90,000 of income pre-retirement, and you figure out your budget, and you think that maybe 80% of that, or $72,000, then the number you need generally, you can work back to $72,000, probably translates to a number, give or take, about 10 times or close to $750,000. The one thing that's very important, and I'm a believer in Social Security, that Social Security could represent a significant portion of that, let's say $72,000, and so maybe you only have to achieve $42,000 or so from your own savings.
Now, I know a lot of people think that Social Security may be an endangered species, but you believe in it.
I really do. In fact, I've published a reform proposal of how to make it last longer. But I think there are some, relatively minor tweaks, and I'm not a politician, but I think it can get Social Security back on a solid track.
Is it a long way to do so, or are they things that could actually be done?
I think that, and again, Washington focuses on a couple of variables, which is let's change the so-called cost of living factor, and the other is let's see if we can increase the tax on the higher paid. Those are tweaks around the edges. I think there are reforms that could work, but for the moment, the conversation is really about those two, what I call tweaks.
Jerome, do you have a website you want to mention?
Yeah, we have two. Savings to Income is an educational site helping people how to make that conversion from savings to income, and Golden Retirement Advisors is our affiliated advisor who works with investors and others.
Jerome Golden with us, president of Golden Retirement Advisors, rather. Jerome, thanks for coming on. We appreciate it.
Thank you very much, Ernie. Thanks. Bye.
Coming up on America.